In terms of China, it is true that the IMF has reduced a bit their forecast. They're still forecasting a 5% growth for this year. We are also forecasting a little bit higher than 5%, but that's still a pretty decent number, even if it's significantly weaker than what was envisaged when China started opening up after COVID. And I think that China is really a tale of two economies. You have the old economy, where you have to think about the real estate problems and others, and then you have the new economy, which has to do with electric vehicles, with solar, with many investments in the sustainability space, where you have many new economy firms. And when you go to China, you can see the vibrancy of that. So I think that you have something which is probably not expanding a lot because it's quite stagnant, and in some cases, going down, like the commercial real estate sector in the old economy. And then you have a very vibrant new economy, which is really powering overall growth in China.
And as a bank, are you looking to capitalize on those opportunities within this so-called China new economy?
Absolutely. We are very well positioned to support our corporate clients in China and help them with their international operations. This is where our competitive advantage is in helping Chinese companies grow their international business. We thrive on the opening up of China, and the good news about China is that the opening up of the economy is continuing, and these firms have a very significant position in international markets, and they're growing their exports on the new economy, so we're helping them.
Do you feel any political pressure to reduce your footprint in China, given some of the rhetoric that's being exchanged between China and the US, and even China and EU more recently?
Yeah. I can tell you we haven't been subject to any direct political pressure. I mean, people talk about the role of banks and non-banks in China. Maybe this is something that is felt more in other jurisdictions, but I can tell you that from the point of view of the United Kingdom, we haven't had any moral suasion coming, even if there are sometimes some voices in Parliament which express some concerns about engaging in business with China. But I think you cannot write off China from the global economy. It's the second largest economy in the world, and our role is to facilitate the business of international companies and financial institutions who want to do business in China, and the internationalization of Chinese companies. So we stick to a very professional business orientation in what we do, because I think it's important that at a time where there is fragmentation in globalization, you have connectors, you have bridges, and Standard Chartered is a quintessential bridge between advanced economies and developing economies, and across emerging markets and developing economies.
I guess one of the traps we fall into looking at the world economic outlook is we spend too much time focusing on the first derivative. So what's the change in growth levels, and not enough perhaps on the absolute level, which is that China is still, even this year, going to grow around 5%, next year still at 4.2%. Would you say that China, India, the Asia-Pacific region is still a bright spot in terms of where you as a bank see growth opportunities? Where else are you seeing those opportunities?
I think the opportunities are huge and remain huge in Asia, but not just in Asia. You can also see that the Middle Eastern region, in spite of the recent news, sad news that we all know about, but still is having a very, very expansive period because of the oil prices, etc. But going back to Asia, it continues being the highest growth economy region in the world. If you look at not only IMF forecast, but any other forecast, emerging Asia is expected to grow by 5% this year. This is far higher than the 3% global average. And emerging Asia is 4%, and China is 5%, and India is 6%, sorry. But that's far higher than what advanced economies are doing. And in Asia, you have now not just one engine of growth, but you have three. You have China, which still, given its scale and the growth rate, not as high as in the past, but is important. You have India, and then you have the ASEAN region. which is more and more interconnected, and again, is another source of dynamism for the region and for the world.
I want to take you on a slightly different tact. I've also spoken to your CEO, Bill Winters, a couple of times, actually at a decarbonization conference, and I know that it is a big theme for the bank, the role that financial intermediaries play in this green transition. But recently there has been a huge amount of backlash at any company that has been trying to be too aggressive with their ESG policy stance. Are you detecting that in your own shareholders? Is there a bit of a backlash against some of the things that Standard Chartered are saying on their decarbonization drive?
No, we have not. I think that our shareholders remain very supportive of the strategy that we have. Actually submitted to the shareholders vote our net zero plan in 2022, and it was endorsed by an overwhelming proportion of the votes, and we continue moving ahead. So we haven't had that backlash. Of course, we want to make sure that the steps that we take are consistent with the realities in our markets. And given that emerging markets are the ones that really need a just transition, so that the movement towards net zero is accompanied by the continuous economic and social development of these countries, that you make sure that things happen during that transition in a way which is sensible. But we have taken bold steps, for example, regarding coal. We have taken bold steps regarding the objectives that we have established for reducing absolute emissions for the oil and gas sector. But still, we're doing this at a pace which is consistent with the realities of our markets.
Well, I'm going to have to leave it there.